10,467 is how we wrap up. The Nifty Bank too in the last few minutes has come down a little bit. It was flat, and the mid caps and the small caps, I presume, would have just come off a little bit from the levels that they were trading at. So the market breadth would have converged probably to 1:1 or thereabouts. Let's bring up the mid caps and the small caps too. And my guess is that they would have just lost a little bit of sheen. Yeah, they have come off from the levels that they were trading at. The mid cap index is very flat. But the best performers and the worst performers. Starting off with the winners, so Tata Steel, to an extent Dr. Reddy's, HDFC Bank has had some gains, so that's giving that bit of support to the market. And then stocks like ONGC and TCS marginally in the green. But then look at the list of losers. State Bank of India down 2%, Axis Bank is somewhere there too, Hero MotoCorp is down about a couple of percentage points, Bajaj Auto has some weakness too. So autos and banks, rate sensitives by and large have come off, and you wouldn't blame the markets today for punishing some rate sensitives in the session. But broader markets, I'm guessing the market that has converged.
Definitely, if you look at it, it's not as bad as the large caps that you see in terms of market breadth. I can find more ideas on the positive side that have been moving up. So let's talk about some of those names. JP Group, you have JP Infra, JP Power and JP Associates. They have remained the star performers for last few days, barring ADAG pack though. And so ADAG should come next on your screen. RCom. And also RCap, Reliance Capital has regained, most of the losses, I would say, have been recovered over the last 3-4 sessions. So if you look at the stellar run at that counter, there are two interesting mid-cap PSU banks that we talked about earlier in the show as well, United Bank and Dena Bank. Dena Bank had at least double volume, and United Bank, in fact, moved up with 3 to 4 times higher than average volume. So that is interesting. Very high amount of buying emerging at lower levels at these counters. You also had some more PSUs in other sectors, not only banking. So Dredging Corporation was a star performer, as the newspaper reports came in that an important meeting is taking place today with regard to its disinvestment. Hindustan Copper also moved up in today's trade with good volume, although the entire metal pack has already run up. So maybe Hind Copper, GMDC and other commodity stocks are kind of trying to catch up. You also had Monet's path moving up from the same steel space, but not for the same reason, because now there are more and more bidders coming in for Monet and Bhushan. So that was the report that came in the morning. You also had some mid-cap names like Philotex Chemical moving up. That was almost at 20% mark when I saw it last. But even in this good market, Balrampur Chini is one stock that declined with good volume. So there was definitely selling pressure at this one counter. There were a few more losers in markets, but volume was more on the buy side. So my list today included more of the stocks that moved up, and there are very few losers.
Yeah, but it's just very interesting. Things under stress seem to be doing really well. Just before I bring up the market close, I want to mark a couple of real estate names. Maybe Pradeep marked them already, but I thought it was very interesting to see what happened to DLF and then a clutch of other names as well. I think real estate by and large had a fairly decent outing in the session today. 6.5% for DLF in trade. That's not a mean feat. And a clutch of other real estate names too did reasonably well. So, and then of course all the stressed names, JP, Unitech, JMR Infra, everything with an infra stroke real estate flavor had a fairly decent outing too. But that's just the nature of the moves that have happened today. On balance, if you bring up the volumes or if you bring up what the contributions are, you will see that banks contributed on the downside. Volumes, you would expect this. The NSE cash volumes fairly high though, I must say. Maybe some bulk deals that have happened too. F&O, expiry day, you would probably see these volumes. And the contribution list, you will see financials also help save the likes of HDFC and ICICI Bank, but SBI, HDFC, Kotak Bank, Axis Bank, you see that financials and rate sensitives by and large didn't have the best of days. The auto stocks are missing here, but a couple of auto names too corrected quite strongly in trade today. Hero MotoCorp, for example, down about a couple of percentage points. Bajaj Auto, Eicher Motors, all of them down about 1% apiece. So autos and financials didn't have a good day. There were exceptions, as we said, the likes of HDFC Bank and ICICI Bank, and commodities by and large doing okay. Final thoughts from our experts though. Ruchit, what about, what within the Nifty stood out for you? One is of course the index trade, but if there is a Nifty component trade that really stood out for you on the charts.
So probably Neeraj, if we first analyze the Nifty since last 5-6 trading sessions, what it has done, although markets are trading at its all-time high, but the trading ranges on a daily basis are very small. So this usually happens, in a consolidation phase. So we can say that in spite of market trading on the all-time high, it's more of a consolidation phase in the index and stock-specific momentum which we have been witnessing. Now, if we come on to the sectors first, then in this consolidation phase, what has been outperforming? One is real estate, as you just mentioned about DLF and some other names, mid-cap names specifically such as Sobha and Kolte Patil, and pharmaceutical sector, which since last 2-3 trading sessions have been attracting good volumes. So I would rather prefer, rather than taking a trading bet on the index, which is not showing any directional move, or which is not showing a huge momentum on either side. I think one needs to go now stock specific for next few trading sessions, and pharma and real estate names would be the two sectors where one should focus on. Sun Pharma is one of the pharma stock within the index names or large cap names which has given a breakout from a falling trendline resistance, that too coupled with very huge volumes. So I think in case I have to bet one index stock from here on, then that would be Sun Pharma.
Parthiv, how would you advise your clients to approach markets in a new series? Because markets will start factoring in the expectations with budget. You'll also have the earnings season kicking in towards the middle of the month. What's your strategy?
Pradeep, frankly, I think I'm expecting January to be very volatile, and the reason being, no doubt, I think so far so good. The markets have really shrugged off all the negative news. Generally, I think I'm really surprised at the resilience of the market, even after knowing yesterday's announcement about the government's enhanced borrowing plans and slightly slipping off from the fiscal deficit target. And despite all of that, and the yields today touched almost 7.37%, not boding well for the banking sector and the NBFC sector. But overall, I feel that I think not a bad idea to be slightly cautious, and that is the reason why I think this is an apt market where I think one can really, I think, build a portfolio not around looking at the index or the markets overall, but looking at the sectors that they are betting on. And I think select sectors and select stocks are the key themes which are definitely going to outperform the market. But I think not a bad idea at current levels, and especially in many of the small and mid-cap stocks, if one has a portfolio more centered towards it, we are suggesting clients to book out some profits, say out of 100 rupees, come out at 20 rupees, 30 rupees, stay on cash, because I think pre-budget, then there'll be talks and rumor mongering about the long-term capital gain tax, so on and so forth. So all these things are going to happen and will give fantastic opportunity, because volatility will definitely give very good entry points. So we are suggesting clients to stay on cash at least 20-30% of their portfolio, especially if it's very mid-cap, small-cap oriented, and I think waiting for the opportune time for re-entering into the market.